Hey everyone, welcome back to another episode of AWM Insights. We're back together here in person in good old Pasadena, California. And today we're gonna jump into the world of crypto. It's been a little while. For those of you long-term listeners, hopefully you remember the good old days of 2020, 2021, where I feel like we were talking about this general topic on a weekly basis. And here we are again. It's kind of back in the news, or been back in the news on and off for the better part of the year to date. And so we want to talk about it. We want to, both explain why maybe that already is fairly well understood, but also give our quick take on the general asset class. It's not fair to say we'll have a specific detailed take on any one coin or another. We'll certainly touch on Bitcoin a little bit, but crypto is a gigantic minefield of an asset class, if you want to call it that. Nowadays, there's all sorts of meme coins, NFTs out there, and you can really get lost. So we're going to try to keep this a little bit relevant and touch on the main talking points today. So let's jump into it, Mena. Right, we like I kind of said, crypto has been on a pretty good run lately. Maybe you can unpack exactly what's going on, what's behind all that.
Yeah, and I feel like this is going to keep coming up every 3 to 4 years. We've witnessed two cycles, call them crypto winters, where we've seen the asset class really boom. That happened in 2018 and then 2021, and we saw then a massive contraction down. Now we're in the boom phase, so obviously everyone's going to be talking about it. You're going to hear about crypto from all of your buddies whenever you have a barbecue, from your barber,
long lost grandmother, maybe.
yeah. Everyone's going to be telling you how amazing it is and how they're all in. But yeah, I would really take a step back and think about all of those periods of time where crypto also hasn't done well. It's not enough to just look at the upside. You have to really look at the asset class from a holistic standpoint. And, if you did buy Bitcoin in 2016, you've done very, very well if you've been able to hold on through the multiple 80% downturns that you've experienced. So it's not really all rosy and peachy across the board. And also, if you really look at the asset class and you look at a lot of the projects that have been going on, there's been a lot of Ponzi schemes and a lot of just rug pull projects where investors that have deviated away from the larger cryptocurrencies, think Bitcoin, Ethereum, Ripple, have lost everything. So there's multiple angles to this conversation, and it's really not as simple as buy this now, make money in a guaranteed fashion, and yeah, you're going to be better for it. It's nuanced here.
Yeah, nuanced, and we'll unpack how we think about the difference between speculative, I would call speculation. Let's just purely call it that, versus investing. But before we do that, I do want to take a quick step back and also give some context as to what's driving this. I think there's two main trends or main themes going on in the world today. One is that there's actual hard and fast legislation that has just been passed both in the US, India, that are crypto supportive, a little bit more angled at what are called stable coins. Again, crypto is a very broad asset class. Stable coins, if you go back to some episodes we recorded many years ago, that actually is an interesting use case of crypto. But some real hard legislation, like I said, that was just recently passed in the month of July, mid-July. And then there is this general return of speculative behavior within the broader market, within both crypto and just public markets in general, where meme stocks are back. There's all sorts of crazy numbers being posted by seemingly boring or not super strong companies. because of, whatever, socially engineered or just viral type narratives that have caught on. So there's a couple core driving forces going on. And then that's expanding from actual interesting use cases within the stablecoin world to things like Bitcoin, Ethereum, and then Doge being back in the mix as well, where some of these things still don't have any utility and you can't actually value them in any traditional way, certainly. And here we are, right? So both the general cycles of the market are at play that you just highlighted, but the actual driving forces that I think have contributed to the peaking out, or I shouldn't say peaking out, I'm not trying to time the market here, but the peaking of the current cycle does have some meat on the bones, let's call it. I think it's more so in the world of stable coins than anywhere else, but that could be a whole nother conversation. So the other thing, as a result of all this newfound attention, not newfound, but increased attention, unfortunately, there's been record hacks as well, right? As something goes up in value, well, guess what? People are trying to steal your money as well. So just another good thing to be aware of, right?
And I'd also say, like, quantum computers, and I got into a rabbit hole today on that, but there will continue being these hacks. That is a massive, massive risk factor when you are investing in this asset class. If you buy a share of NVIDIA, it's going to be in your brokerage account. If you buy an ETF, it's going to stay there. If you buy a cryptocurrency and your wallet gets hacked, it's not stored properly, or even with the introduction of quantum computers, like we don't fully know how quantum computing is going to impact this asset class, but it could render a lot of this technology useless, depending on how the industry actually evolves. So yeah, there's like the hacks piece, which you just brought up, I think is one of the biggest risk elements in this asset class that people are not talking about.
Yeah. Well, yeah, look, there's still a lot of, hey, you need to believe, fill in the blank going on here, which in a way I think is a good segue into our take. Again, if you've listened to this podcast for a while, I know there's some of you out there that have. Thank you for being longtime supporters. But you'll know, or you'll recognize the idea of a picks and shovels approach. That certainly applies here. We can go down a couple different routes here. Let's just stay with the picks and shovels. So, Mena, maybe give a little bit more color. What does that actually mean? How have we actually allocated to the world of crypto, Web3 at large, et cetera, and taken advantage of it in some cases?
Yeah, well, there's a lot of different angles to tackle this on. Real estate, I think, is an interesting way of looking at the picks and shovels approach. Obviously, cryptocurrencies take a lot of energy. There's a lot of mining involved. There are a few of our investments that actually take advantage of these dynamics and have miners that are leasing spaces, or have companies that are in this cryptocurrency space that are leasing large spaces that need to be in certain locations for the energy piece. And they're taking advantage of being able to realize a higher rent than they otherwise would if they were rented out to a company like AWM. That's an approach. Looking at investing in physical companies, like there are supporting companies that help supercharge this cryptocurrency industry. NVIDIA is one that actually did really well a few years ago for this exact reason. They were able to actually improve mining and improve a lot of operations, and they got a bump up in their valuation for that. AI has contributed to that a lot in the last few years, but we shouldn't ignore how NVIDIA actually did make a lot of money in the cryptocurrency space by producing a product that a lot of people ended up using. So it's more so, instead of investing in the asset class, investing in the utility, it's investing in the just operational side, where people are going to be working on this. People are going to be mining for it. So sell them the picks and shovels instead of focusing on the physical actual commodity.
Yeah, well, if we go through the whole valuation creation kind of formula or model, we want to emphasize where value is actually created. Speculation, value can be created there, but that's more of a perception than actual reality, right? When you buy an asset and it goes up, you're like, great, but my value's gone up. But has it done anything tangibly, let's say, for the world to add value? And that's how we really think about investing at large, right? We can kind of apply the same framework to gold. Gold has no cash flows. There's no inherent utility. It really is just people speculating that the price will go up. Sometimes you get that right. Sometimes you get that wrong. We don't view that as really a sustainable investing approach for multi-generational wealth. The other piece I would add to what Mena, you just kind of the picture you just painted is also in the private markets. I mean, the same kind of framework applies where we want to be in new companies creating interesting applications or use cases or utility in this space for people to use. Again, not just speculating and buying a token. Maybe that's a company that helps other companies tokenize something. So, right, that means you're taking an asset. It could be a baseball card, and you're attaching a crypto token to that baseball card, and now you can track that via blockchain and buy and sell things in a lot more of a seamless manner, right? That's an interesting application. That's just an example. And so that's really what we look at, and we've had some interesting opportunity and success there as well. So we want to see where value is created and invest there. We do not want to speculate on things that we cannot truly value, whether that be gold. That applies similarly to Bitcoin as well. Maybe Bitcoin becomes a digital gold. I mean, the other interesting thing to just kind of look back and reflect on over the last 5 years, the narrative around a lot of this has changed. Certainly stable coins hasn't. I think our stance on picks and shovels hasn't really changed. Like the whole concept of blockchain, very interesting technology. Still trying to find a little bit of a use case, broadly speaking, stable coins being a great use case. Like I said, tokenization seems to be getting a lot more traction as well. That's very interesting. But Bitcoin, it doesn't really have that use case quite yet. It is, now potentially a store of value. It was thought to become the, currency of the future at one point. I don't think that that's really in the cards, certainly in the short term. And so that's something that you all listening to can help use. A framework like that can help use to differentiate, an investment, a true investment, long-term value creation investment versus something that's purely speculative. So hopefully that all helps you all listeners here. If you have any more questions, definitely shout us out, get in contact. We love getting content from all you guys. So we are addressing timely questions that are, nagging at you or you're just curious about. So definitely reach out. But just remember, especially when it comes to, these more volatile kind of cyclical investments, we really do prioritize substance, value creation, discipline, and long horizons. There is something within the world of Web3, within crypto. And we've kind of believed that, again, since many, many years ago. But we're not going to go chasing any headlines or anything like that just because of some recent short-term performance. We just know better than that. With that, we will wrap. Sorry for that little long-winded conclusion there, but hopefully that was all helpful. And we'll wrap, as always, with own your wealth, make an impact, and always be a pro. Thanks a lot for listening.